Hey everybody, welcome to the daily update for Monday, February 9th, 2026. Happy Monday. Hope you had a great weekend. Just a reminder, next week is a shortened week. It is a 4-day week. We have President's Day off on Monday. And if you are a free subscriber now, look for a President's Day deal coming soon. All right, so what a day in the market. When I start these daily updates, I have to do a lot of filtering because there's so many things I want to talk about, but I don't want these updates to be too long and too rambling. But today's like one of those days when there's so many things I want to cover. Let's just go over to, well, I'll tell you what, let's start with the action in the market. So overnight, we had a little bit of a pop in the futures. It leveled out, it dropped, it went up, down, up, down. Then this morning, we had a little gap down, immediately saw buyers come in, push it back to Friday's close, little dip here, and then we finally do this break. We're back above the 9, the 5, and we just start riding. We break Friday's high, and we don't even close below the 9 EMA intraday until basically almost 9:30 Pacific time. So very strong buying comes in. Then we kind of level out. We go flat for the rest of the day. A little bit of profit taking it at near the close. But all in all, a pretty good day and a nice follow through from what we had last week. So let's talk about last week because I think this is super important. This was a bad day right here. Okay. This was a good follow through day for the bears. And we stopped right at the previous low, which was on the 20th. And so what I said in the daily update on last Thursday is I said, this is a binary spot. We could just as easily gap down tomorrow, meaning Friday, big, or we could gap up. There's no edge, right? There's no edge. Now, if you want to try and catch a falling knife, you can. And sometimes it works out. And it's worked out a lot of times here in the market. I mean, look at this. Worked out here, worked out here, 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 here. It always works out until it doesn't work out. But I'm not a big fan of binary outcomes. I'm not a big fan of having no edge, and I'm not a big fan of catching falling knives. So what we were looking at were names that were oversold that we would want to get involved in intraday. Once we see what the open's like, once we see where we're at, once we settle out, can we find an intraday base from which to get long certain positions and get a follow through? And that's exactly what happened, right? This big follow through here. And then on today's bar, we followed through even more, which is great. So if we go over here, now here's a couple names that we had on the green list from Friday. Meta, right, which is up 2.5%. That's a nice snapback. Microsoft has been beaten down. You had this very narrow bar here to define your risk. Okay, this is up 3%. Palantir, again, had a very narrow bar here, right? Up 5%. And then Kava, this is something that's been on our watch list. We put it on the green list here. Triggered, went to the active list, has stayed on there. It's up 20% since. All right, so why am I showing these things? Because you had to make a decision on Friday how you wanted to play this. Right? So you had an opportunity in Friday to get involved in Microsoft. It came back in, it tagged the previous low, firmed up. Okay, that's your out spot, right? And then you say, I'm going to get involved in it. I'm going to take a small position. And then you have to make the decision at the end of the day, do I hold it over the weekend, right? This is that transition from day trade to swing trade. It's the exact same thing that's going on right now with a lot of beaten up software names. Okay. And so let's just go look at the software ETF, right? So this thing has been beaten up like crazy. We know software has been killed for the last few months. And look how far away it is from the 200-day, and it's running away from all these other moving averages. And we got this 2-day pop, right? So the way you play stocks that are oversold like this, the way you can play the software industry right now is, sure, you could have bought here. You could have bought the falling knife. And maybe you get lucky and you get bailed out. that's not how I would play it, because, you know, it's like playing Russian roulette. You do it a few times, you survive, but the one time that you don't survive, you're destroyed, right? So you could have done that, or you could have waited, found an intraday base here, got involved, saw where the stock finished the day, decided, hey, maybe it finished strong, I want to hold it over the weekend, or maybe it finished strong and I want to take a little bit off and hold over the weekend to manage your risk. Or you can play it a different way. And what you could have done, or what you can still do, is wait for the move after the move. Now, the move after the move gives you better odds that you're going to be able to be profitable in a trade. It gives you a better risk reward range, right? The only downside, and I'm saying downside in air quotes for waiting for the move after the move, is that you might miss out. It's possible that you'll miss out, right? But let's just break down how this would actually work. So there's buying the falling knife, not a great plan. There's buying intraday, holding to see if price supports it to carry it over, make it more of a swing trade, right? Or you wait for this move here to end. Now, where will it end? Maybe it ends at the 8. Maybe it ends at the 21. Who knows, right? But you wait for the move to end. You watch for a consolidation, maybe a day, 2, 3 days, and then the move after the move is what you participate in. What happens in that situation is you can give yourself a narrow range from which to define your risk. So for example, if you're buying here, you've got no safety net here. You don't know where you're going. You buy intraday, you're using the intraday range, right? But if you get like a little sideways consolidation here for a couple days, then this is your risk, right? You buy above here, you're out below there. You know how you can size your position. You know when you'll be right. You know when you'll be wrong. And the odds are much more in your favor because you're only buying if you move up here. So here's the counter trend move. Here's the sideways consolidation. Then the move after the move in the same direction as that counter trend rally gives you a higher percentage that you're going to be right on this trade. And then whether you're going to hold it for a swing trade, whether you're going to hold it for a active investment, that all depends on your analysis of the stock. It all depends. Does price support that? Are we recapturing the 8? Are we recapturing the 21? Do we have small pullbacks in base? Are we holding support levels? Are we recapturing the VWAP? It's a progressive process. So that's how I would be looking at the software industry right now. If you look at the stock like, let's go over back here to PanW. All right, so same thing, right? There's where you're buying the falling knife, not a great trade. This is where you're having a little bit less risk, buying intraday. You finish strong, maybe you sell a little bit, you hold over the weekend, you see some follow through here, great. But the other option is you're not in it now and you're just waiting for it to do a 2, maybe 3-day pullback consolidation. Then you're getting in the move after move. You can also cheat, right? If you get a small pullback, you can start to ladder in. You don't always have to put your full position in at one time. You can put a probing position to see if you can hold levels. You can add if you finish the day stronger, and then try to find an intraday base the next day to maybe get a full position. So that's how I would approach trading the software stocks right now, and basically anything that's oversold. That's just how you trade an oversold stock. All right. So let's go through the indexes, see where we're at right now. If you want to watch this full video and you're on Twitter, just click the link in the reply. And if you're on YouTube, click the link in the comments. All right.